Everyone cheers when rent growth actually spikes, but what if I told you that it could kill your deal? So here's the thing. Aggressive rent can look great on paper. However, until you realize it attracts new development. So as new units flood the market, which is something that happened recently in San Antonio, rent growth slows, concessions increase, and vacancy also creeps up. So when you're underwriting, don't just assume that the past equals the future. Study the development pipeline, look at the absorption rates and population growth. Rent growth is fuel, but if the tank's already full, it's just more fuel to that will burn the engine. So for example, this deal that we're looking at in San Antonio, which recently got flooded with all new development projects. That new development project is going to absorb what the new net migration into that market. And by doing so, it takes away tenants from other properties, which will increase vacancies. And then these new properties that have just been developed are offering concessions to people that are moving in, meaning they'll give 1 or 2 months free if they sign a 12-month lease. So now your property that you're looking at, which is not a newer property, more like a value add deal, is going to be taking away those tenants away from your property and offering them concessions. So what do you have to do? You probably have to offer the same type of concessions for that particular deal. So in this example, we are looking at higher concessions than normal in this market, offering 3.5%. And then also our vacancy, we're increasing that to be more closer to the market vacancy, even though that the actual vacancy on this property is at less than 10%. We want to be more conservative in our underwriting.